Hey, good morning, everyone. Paul McMann here with Forex Smart Trade. So glad you could be with us this Tuesday morning, April 13th, 2021. Our mission here at Forex Smart Trade is to help you become the best version of yourself. And we do that by teaching you how to become financially independent through currency trading, using our super accurate proprietary trading tools and our best in the business one-on-one training. So with that, let's begin. And in this session, I usually, we have probably a dozen different signals through our indicators, which you see up on the page. I focus primarily on two signals. One is called the 10-point trade. And the other is something called the thick orange line trade. So we're going to try to do an analysis and see if we see any 10-point trades, and then we'll toward the top of the hour see if we have any thick orange line trades. But before we start, we've got to listen to this guy. He's a little bit negative, but let's go ahead.
Due to federal and state regulations, we are providing the following disclosure. Please stay tuned, as this will take less than a minute. Foreign exchange, futures, and cryptocurrency trading are highly risky, and you can lose all the money you invest should you decide to engage in live trading. We are not responsible for your investment, trading, or tax decisions. We are not licensed financial advisors, traders, accountants, stockbrokers, or attorneys. We are not licensed commodities brokers and do not engage in or facilitate commodities transactions. We are not an introducing broker, and we make no recommendation as to where you should invest or what broker you should trade with. As you apply what you learn, we recommend you seek advice from licensed professionals. Any trade results that we show should not be considered typical of our students. We do not and cannot track the results or performance of our students' private trading accounts. We do not know what a typical or average student earns or loses trading. This is not a get-rich-quick program, guaranteed system, or business opportunity. We sell training and trading tools. We make no promises our training or tools will generate future income for students, and you may not make your investment back, including your investment in this training. Any redistribution or recording of this material is strictly prohibited without advance written permission.
All right, that's a tough way to start out the morning, having to listen to that guy, but let's move forward. As you know, I work off of a trade routine every day. It's almost like a little pilot's checklist. And I don't know, I have trouble remembering things these days, but basically I read something recently that people who use little checklists tend to be more successful. So I do for certain tasks, even for tasks that I've done hundreds of times. It just keeps me focused and lets me, I don't have to think too much about it. But first we want to just check that our charts are live. And we do that by, here's the green chart. Up here at the top left, it is green. Bottom right, it is green. That means I'm live. If it's red, that means I'm back in time. I would go back in time if I were back testing. Back testing is when we take a look at a signal and then we see how effective it is ourselves versus just taking somebody's word for it. So we want to make sure we're current with both the green chart and the CoinEx or the turnkey. And I know I'm current because I can see the price is moving over here. So both are turned on. We're connected to the market. Review of yesterday, last week, on last week's trade. Good practice to, at the end of every day, take a little evaluation of what happened good, what happened bad. On the bad, we want to figure out what went wrong, and so we can figure out how to fix it. Last week we took two 10-point trades. One closed positive, one closed negative. I still liked the signal on that Euro USD. In fact, I took it for a lot size of 10 in my other account. This account, by the way, is a demo account. But what I ended up doing on my other account, I still, even though I got stopped out here, when I started to see the signal change, I hedged against it and ended up the day on a net positive. But when we took this trade, it was a good signal. I guess the one thing we could think about is well, I guess not. No, it was a good signal at the time. So and that happens every once in a while. We will get stopped out, and part of the training is to show you how to deal with that and protect yourself so that you do have net positive days. We are technical traders. As part of being a technical trader, we trade based on price movement. We do not trade based on news. So we want to check and see if there's any news that might impact trades that we're going to take. We do that by going to Forex Factory, forexfactory.com, and it lists news that are likely to impact currency pairs, and it breaks down the news into 3 categories. Low impact is a yellow, medium impact is a orange, and high impact is a red. So if we see some items that are high impact, we don't want to be holding a position when these items hit. And today, the US dollar is releasing CPI information at 8:30 this morning. We are at 6:30, so we are within 2 hours of that event. Normally, I'm not going to take a trade on the US dollar because of that, because I don't want to be holding it. When we do our analysis today, we will analyze the US dollar, but the likelihood is we will not take a trade because I don't want to be holding it when the hour shifts or when this news item comes out. Last thing is we are here to see that you succeed, and with that, if you're not, you should be trying to attend as many of the live scheduled events, webinars as you can. This yellow portion is for light members. The green and purple portion are for regular members. But we do trades every day in addition to this trade. The people doing these trades are very good traders. Historically, we net, with all of the trades, we net about 150 pips a week. If you do 150 pips a week, you will double your account every 4 months. So until you have at least doing 10 pips a day consistently on your own, you should try to attend these and copy them. That's what I used to do when I started. You know you're getting good when you start to disagree with some of the analysis that you see. And the other thing is that they're teaching moments. So you will pick up things. There's different people that do the different trades. You will pick up tactics to help you trade better. And that's what we're here to make you do. So attend as many of these as you can. All right, so with that, let's go ahead into our technical analysis. So on the technical analysis, for the 10-point trade, I start with the majors and minors, and I know I said I'm not going to take a trade in the dollar. This is a composite chart. It is showing me 6 different currency pairs: Australian dollar, Euro dollar, pound dollar, dollar Canadian dollar, US Swiss franc, US yen. And they're all on a 60-minute chart, which means each candle has 60 minutes worth of information in it. I use this as my setup to determine what my next, if I want to take the trade. If I decide it looks like a good trade, then I'm going to go to a more detailed chart to see what the other time periods are telling me and to look at my support and resistance to figure out how much movement I have and how many pips the trade is worth. So here, Australian US dollar, I start my analysis by looking at the middle chart, which is the majors and minors. Red and green are major, capture major movements. Black and gray capture minor movements. Ideally, I want to see all 4 moving together. When they don't, I'm going to focus in on what the red and green are doing. Here, I've got everybody above the blue line. The blue line is the overbought line. What that means is that the prices have gone up to a point where the market's overbought, and we should see the prices starting to come down. And I can tell when the prices are starting to come down when all the lines are above the blue, the lines are pointed down, and the red line crosses over the green and the black crosses over the gray. So this is the beginning of a sell signal, and I've got 3 points here. So basically on this trade, what I'm trying to do is count points. I want to get a point from each section, and I want a minimum of 7 points. So I've got 3 here. 1 that we're above the blue line, it's just starting to enter the channel. 2, both lines are moving down. And 3, the red is crossed over and the black's crossed over. Once I have 3 points here, I am then going to go up to my TNTs. And there are 4 different indicators here. The 2 orange lines, the thick and the thin, and the 2 blue lines, the dotted and the thick blue. And I want to count how many lines are consistent with what I'm seeing here, the direction I'm seeing here. The 2 orange lines are going down, so that's consistent with the down movement I'm seeing here. And the blue lines are inversely related. So I am seeing, so they're both telling me down also. So I've got all 4 lines telling me down. I want to have a minimum of 3 out of the 4 lines telling me down, but in this case, I got all 4 telling me down. So I've got 4 points here, 3 points here. Then I want to look down to this indicator on the bottom. That is my pressure indicator. And right now the pressure is sideways. The lines are kind of going up, but we've got a big gap here and the pressure is sideways. Ideally, I want the lines, either the lines going down, or I want the red line on top, and I have neither here. So I do not have a point here with the pressure. So since I don't have a point with the pressure, I'm going to pass on the trade. One of the keys to being a good trader is having that high consistency rate. To get that high consistency rate, I want as many of the indicators to tell me it's a good trade as possible. And when I get all of those indicators telling me it's a good trade, that allows me to take the trade with higher confidence and a higher expected close. My accuracy is about a little over 80%. We've got many traders that trade in the 90s or just around the 90s. So I don't have the signal here. I'm missing the signal on the pressure, so I'm going to pass. And the reality is you only need a couple trades a day, 2-3 trades a day to be making money. So if it's not there, I'm not going to force it. I'm not going to try to pre-guess, oh, this is gonna turn soon. I want to see it. When I see it, I'll take the trade. If I don't see it, I'll pass. Euro US dollar. Start again with the majors and minors. We are in the channel, and we're more than halfway. So I'm going to just keep moving on. I do not typically like to take a trade when we are in the channel. I want to be able to get the full run and I've got a better chance of getting that full run if I start up here and catch the run all the way through. Pound dollar. Again, we're almost through the channel. In fact, the green line has already kind of come through the channel. This is a terrific signal had we caught it last hour. Very steep lines. The green line is coming down very steep. Had we caught it right at the top of the hour, we could have gotten 25 pips, 26 pips, almost 32 pips before it started to pull back. So this was a nice signal had we been able to catch it right at the top of the hour, but we didn't. But I don't like it. We're more than halfway. I don't know how many more pips are left in this move. U.S. Canadian dollar. We are overbought. So the lines are above, but the minors are coming down. The majors are going up. So I don't have agreement here. I want everybody coming down. So I'm going to pass. US dollar, Swiss franc. Overbought. The line's above the blue. Minors coming down. Majors going up. Again, I don't have a consistent. I want everybody doing the same thing. So we're going to pass. US dollar, Japanese yen oversold. The lines are below. The miners have kind of got to the halfway mark, but that's okay. I'm more interested in what the majors are doing. The majors haven't entered the channel yet, so I like this. So I've got everybody's pointing up. I have got green crossed over, gray crossed over. Another thing I like about this, which isn't part of the signal, but if you look here on the last hour, this part of the green line is less, there's less of a slope here than this part of the green line when the candle changed. So the slope got steeper. Generally, the steeper the line, the better the trade. So I like that we've got the steepness increased here. Two orange lines going up, two blue lines going down. So again, all four are telling me that this is a buy. However, the pressure isn't quite there yet. I've got down pressure. The lines are gapped. The gap indicates that the signal is weak, but it is still going down. The green line, the green pressure line has started to bend, and eventually these two lines are converging. So eventually the green line is going to cross. That's positive, but it hasn't crossed yet. So I want to wait till it does cross. I don't need to take the trade if it's not there. So I've got three sets of charts, composite charts. This second chart is principally non-US pairs. So we've got the euro pound, nice steepness here. Again, had we caught this when it crossed over last hour, nice 16 pips here, but it is almost through the channel, so nothing here. Australian pound or Australian dollar, yen, we're stuck in the middle in the channel, so we're going to pass. Euro Canadian dollar, I'm overbought, but the lines are going sideways. My major's going sideways, even though my minors are going down. I want everybody going down, and I don't like that we've got this kink in the line. Australian New Zealand dollar, oversold. Everybody's going up. The lines are kind of together. Steepness is increased a little bit here on the green line. Jumping up to the TNTs, the two orange lines are going up. The dotted blue is coming down. Dotted blue coming down means up. So three of the four are telling me up. I've got down pressure and I've got strong down pressure. It's strong because of the steepness of the slope and the closeness of the lines. When the lines are closer together, it's a stronger down signal. The lines are converging. They're getting closer together, but the green hasn't crossed over yet. I need either the lines going up or the green to cross over. It's just about to cross over, but it's not there yet. When I see all of that, now the other issue with the AUD-NZD is that it's the end of the day there. It's after 6 o'clock. So in the evening, we're not going to get much volume on this or movement on this because it's going into the middle of the night. New Zealand USD, overbought. Everybody's pointing down. Red's over, black's over. Nice steepness to the lines. So I like this. 3 points here. Two orange lines going down. Two blue lines going up. 4 points here. So I got 4 points, 3 points. I'm looking for a point from the pressure. The pressure's not cooperating today. I've got up pressure. The green line has started to slope. The lines are converging, but I've got up pressure. So again, nothing here. And, you know, this is consistent with all the other U.S. pairs that we saw on the previous page. Euro, Australian dollar, oversold. Everybody's going up. And we've got the double cross, so 3 points here. 2 orange lines going up. So that's consistent with here. Interesting, the dotted blue is going up, which means down, and the thick blue is going down, which means up. Usually it's the other way around. The last indicator to usually turn is this thick blue line. But so it's giving us 3 of the 4. But again, I've got down pressure. The lines are converging, but there's nothing there. So we've gone through 12 pairs, nothing yet this morning. Australian Canadian dollar, oversold, everybody coming down. Double cross, lines are together. 2 orange lines coming down, 2 blue lines going up. So there's 4 points here. Up pressure, however. Wow, the pressure is killing us on all of these. Again, we're converging. It's eventually going to cross, but it's not quite ready yet. So let's keep going. Swiss franc yen, oversold. Everybody's going up. I don't like this as much. Why don't I like it as much? Because the majors and minors aren't close together. I like it better when I've got all the lines together than when I have the lines separated. But I've got 3 points here by the strict definition of the signal. 2 orange lines going up, dotted blue and the thick blue coming down. So everybody's telling me up here on the TNTs, down pressure, and the lines are converging. So probably in the next hour or 2, this green line will cross over. When that green line crosses over, if this stays the same, that's a good trade, but it's not ready now. Euro, yen, oversold. Everybody's going up. 2 orange lines going up, dotted blue coming down. So I got 3 out of 4 here, 3 here, down pressure. Converging, but not there yet. So we're seeing a lot, this is kind of a different version of this. The yen is driving both of these. So we're seeing the same on the pressure. These lines look almost identical over here. Pound, Australian dollar, we're oversold, but the lines are still going down. New Zealand, Swiss franc, overbought, lines coming down, double cross, so 3 points out of the majors and minors. 2 orange lines going down, that's 2 points. 2 blue lines going up, another 2 points. So I got 4 points here, although the dotted blue is just barely going up. And I've got up pressure here. Lines are converging, so eventually the red line's going to cross over, but we're not there yet. And last but not least, Canadian dollar, Swiss franc, nothing. We're in the middle of the channel, and there's kind of not commitment here. The majors are going down, minors are going sideways. So we looked at 12 pairs so far, and we didn't see a single good trade. And sometimes the best trade that you take is the trade that you don't take. It's just having the patience to wait till the signal is there. Not predicting the signal is going to come, but just waiting till the signal is there. So with that, let's go back. We've got about 6 minutes till the top of the hour. I can tell that by looking up here on the top left. The TR remains time remaining on the current candle, which is 5 minutes. So I'm going to look at another signal. This other signal is good to take right at the top of the hour. It's called the thick orange line trade. And with this trade, we look at what this number is. this number over this in the yellow, or excuse me, orange box is the scale associated with this thick orange line. This scale goes from 0 when it's as high as it can go to minus 100 when it's as low as it can go. And what it's telling us is when it's at 0, it's telling us it believes the buy move is maxed out. It's gone as far as it's going to go. And likewise, when it is at 0, it is telling us the opposite. It believes the sell movement that just occurred has maxed out, that there's no more down in the movement. So if there's no more down in the movement, that's a buy opportunity. If there's no more buy in the movement, that's a sell opportunity. But again, we want to get back to, we want to take trades that have a higher probability of going our way. So I don't want to trade just off of one signal. I want something to confirm it or back it up. And this trade is just a quick little scalp trade that's going to let us catch right at the top of the hour, where if the market is overbought or the buy is maxed out, that will catch a little bit of the down movement. So it is an automatic 5-pip trade. And we've tested it. It's accurate over 90% of the time. So we're going to take 5-pip buy or sell with a 4x stop loss. So that'd be 20-pip stop loss. If we win 9 out of the 10 trades, we'll be ahead 45 pips. We lose 1, we'll still be ahead net 25 pips. So I am looking for situations where this number is either 0 or minus 100 or within 10 points of either end. So minus, excuse me, 67 is not 0 or minus 100. Minus 70 is not 0 or minus 100. Minus 50 isn't. 35 isn't. 30 isn't. 20 isn't. So right at the top of the hour, I can quickly go through these and scan and see if I got the setup for the trade. Minus 37, the next 6. That's not within 0 or minus 100. Minus 21, not 0 or minus 100. Minus 45, no. Minus 13 is close, but not there. Minus 72, no. Minus 76, wow. Let's keep going. Minus 69 is not 0 or minus 100. Minus 29 is not either end. Minus 27, minus 71, and minus 64. Minus 60. Wow. This is the first time, and I don't remember last time we didn't get a single trade. A single signal in any of the trades. So this morning we got nothing. For those of you who took the trade last night, took the trade I suggested last night, which was a pending buy because we were sitting on a resistance line. So last night, this is what I was looking at. It had the signal at that time was showing buy, but you could see all during the day we were hitting this resistance line and bumping it. So I submitted a pending buy so that we wanted to break this line, and if it broke this line, we would take the trade. It didn't. Since the trade didn't close last night, close out the trade. You don't want to have that pending buy sitting on there. The signals have changed. We're entering a new day. We've got news coming up in a little bit. Close out the pending buy. So the pending buy didn't execute. It never broke this resistance line. It came up, it hit it, and then it started coming down. So close out last night's trade. Let's see if we have any questions. Yeah, Gary, if you want an explanation of hedge, we would need to do that privately. That's beyond, because there's a lot of new people here, and that's too hard to explain here. Hedging is what the question was. Can you explain how to hedge? And basically, rather than putting a stop loss on, as you get to be a little bit more advanced trader, I like to hedge. And a hedge is you just take a position in the opposite direction for the protection versus the stop loss. And then so that locks in the trade. So if you have a buy and a sell on the same pair, as it goes up or as it goes down, the loss moves the same. And then when you get a clear signal, you will either double or triple the lot size and go with that clear signal. So then when it moves this much, so say if you tripled it up, when it moves a third of the way up, then you just close everything out. And there's a kind of a mathematical way to figure that out, what the right numbers should be. But you need to have a clear signal to correct the problem. And I am a big hedger because I don't like to take the loss if I don't have to. All right, everyone. Sorry, we did not see we saw no trades today, neither a 10-point trade or a thick orange line trade. But sometimes the best trade we take is the one we don't. So appreciate you being here, and we will see you next Tuesday. Thanks so much.